Welcome to the deep dive. Okay, so you sent us some really fascinating sources this week. They paint a complex picture, not just about money flow, but people flow, highly skilled people.
Yeah, absolutely.
We're looking at, well, what seems like a major rethink of Japan's global presence.
That's a good way to put it. And for you, the listener, our mission today is really to get past the simple headline, you know, Japanese expats declining,
Right.
because it's more nuanced. We need to frame this moment, maybe call it strategic retraction and focused redistribution, something like that.
Strategic retraction. I like that. So understanding why the retraction, the economic forces, corporate decisions.
Exactly. And crucially, where are the people who remain going? Where's that redistribution happening?
Okay, let's unpack this then, starting with the hard data, because the numbers themselves signal a pretty big shift, don't they?
Oh, definitely. A major reversal for decades. The number of Japanese citizens living abroad just kept climbing. A classic sign, globalization, companies expanding everywhere.
Like a bellwether.
Precisely.
Yeah.
But that long-term trend, it's flipped.
Okay, so what are the numbers?
The sources confirm the peak was 2019, hit about 1.41 million people.
1.41 million.
Okay. Since then, it's been a steady drop, down to 1.29 million by 2023.
And this isn't just a blip.
No, this is the first time in decades we've seen a sustained reversal like this.
Yeah.
It feels, well, structural, not just noise.
That 1.41 million peak in 2019, though, what got us there? I mean, that must have been the height of hyperglobalization, right? Aggressive overseas M&A, companies wanting boots on the ground everywhere.
Exactly. Dusseldorf to Dubai, like
Yeah.
you said. That peak was the culmination of a massive expansion phase.
So what's pulling them back?
Well, the forces driving the return home are sort of twofold and
Yeah.
powerful. One is definitely the pandemic's lingering effects. Logistics, uncertainty just made international life feel a bit precarious.
Sure, that makes sense.
But the bigger driver, the really potent one, economic pressure. Specifically, the rising cost of living in major global cities,
Ah.
especially when you factor in the relatively weak Japanese yen.
Okay, let's pause on that economic pressure because that feels like the core story, doesn't it?
I think so.
You look at places like New York, London, Shanghai, costs, particularly housing, have just skyrocketed recently.
Totally.
So if you're on a Japanese pay scale, even with some kind of expat bonus, suddenly that lifestyle abroad looks really tough financially compared to going back home.
It creates this huge gap, sometimes unsustainable. And the sources really highlight this. The biggest population drops are exactly in those major high-cost hubs.
Like the US and China.
Yes, the U.S. and China specifically. Shanghai and New York City, which were always magnets for Japanese talent in finance, tech, manufacturing, they've seen really sharp declines.
The cost-benefit calculation just shifted fundamentally for a lot of people, especially families.
Absolutely.
So, okay, high-cost hubs are shrinking, makes sense, macroeconomics, currency. But what about regions that were historically maybe cheaper? Like Southeast Asia, that's always been a massive destination, Japan's manufacturing powerhouse.
Yeah, and here's where it gets really interesting, like you said, because even there, in Southeast Asia, we're seeing a clear reduction.
Oh, really?
Yeah. Thailand is a specific example cited in the sources showing a decrease in Japanese residents over the last 3 years.
So it's not just cost then?
Not entirely.
Yeah.
This regional shift, this is where the corporate strategy piece really kicks in, kind of overriding the simple economics.
Okay.
Companies are now explicitly, strategically, replacing those traditional expat assignments with local talent, hiring managers locally.
Right. So why? Why prefer the local manager over the tried and tested Japanese expat manager they've sent for years?
Well, it seems to signal a shift away from the old model, the expat as control idea.
Okay.
Now it's more like local manager as market leverage. The thinking, according to the sources, is twofold. One, yes, cost efficiency, that's always there.
Sure.
But maybe more importantly, it's about genuinely understanding the local market. The nuances, the culture, the language, the specific regulations.
Things a temporary expat might struggle with.
Exactly. A local manager can just navigate that environment much more effectively than someone flown in for, say, a 3-year rotation. It's about embedding deeper.
That makes sense. But this strategic shift, it must completely change the logistics of how companies manage their international workforce, right?
How profoundly.
If you're not sending a team leader for 5 years, needing long-term housing, but maybe sending smaller teams, specialists, auditors for shorter stints,
Yeah.
6 weeks, 6 months. The old corporate housing model doesn't really work anymore.
It collapses, exactly. And this is where the need for flexible infrastructure becomes absolutely critical, especially during this localization phase.
How so?
Well, think about it. Traditional long-term leases for expat apartments, they become kind of obsolete if your assignments are shorter and more varied.
Right.
As companies hire local managers in places like Southeast Asia, they still need oversight, right? Training, maybe crisis management, project kickoffs. So they rely heavily on these short-term corporate teams.
Okay, I see.
And those teams need reliable, flexible places to stay and work for weeks or months at a time. Things like service departments, extended stay hotels, even service offices become vital.
So that kind of infrastructure supports the transition.
It provides the necessary continuity while that localization process actually takes root. It has to be seamless for those short-term teams coming in and out across the Asia-Pacific region.
So the need for permanent long-term expats might be shrinking, but the need for continuous, maybe shorter-term business engagement and the flexible living solutions to support that, that's actually growing.
That's a great way to summarize it.
Yeah.
And there's another factor here, a social one, that often gets overlooked in the decline.
What's that?
It's the growing reluctance of dual-income households to just uproot everything for an overseas assignment.
Ah, yeah, that's huge.
Moving one career is disruptive enough. Moving two careers plus maybe kids, schools,
Yeah.
it's incredibly complex.
And often requires a big sacrifice from one partner.
Exactly. And in modern Japan, where dual-income families are much more common, sometimes the standard corporate assignment package just doesn't compensate for that level of disruption anymore.
So, okay, complex picture. Economic pressures in the West pushing people home. Strategic localization in Asia favoring local hires. But you mentioned redistribution earlier.
Yes.
So it's not all just going back home.
Not at all. And this connects back to the bigger picture, our idea of focused redistribution. While the overall numbers are down globally and down in those big traditional hubs,
Yeah.
certain other areas are actually seeing an increase in Japanese residents.
Okay, now this is critical because it tells us Japan's global footprint isn't just shrinking, it's shifting,
Diversified.
diversifying dramatically based on new strategic priorities, moving away from some of the established commercial centers.
So where? Where is the growth happening?
The sources specifically point to increases in places like Africa,
Africa.
the Middle East, Central America, and Oceania. Wow, that's not the traditional map at all. I would have guessed maybe just a concentration in a few safe zones or mostly homebound.
Right. It rewrites the map.
Africa, the Middle East, Oceania. Why those regions? What's pulling Japanese companies and maybe government focus there now?
This is where it moves from just retraction to strategic necessity. Localization works well for consumer markets in, say, Thailand.
Right.
But it's often not feasible in these emerging markets. These regions often require highly specialized skills or knowledge that just isn't readily available locally yet.
So you need the expat for certain roles there.
Exactly. You need focused, high-value expatriate assignments. It links directly to specific interests, think resource security in Africa, minerals, energy projects, maybe big infrastructure deals, often backed by development aid.
Okay.
The Middle East is still critical for energy, finance.
Yeah.
Oceania involves trade, security, resources too, given its location.
So these aren't just any jobs. They're essential, maybe technical, strategic roles.
Often government-linked too. Roles demanding specific expertise that justifies the, frankly, high cost of sending an expat. So it's a shift, you see, from a broad corporate presence everywhere
Yeah.
to a much more hyper-specialized strategic deployment in targeted areas.
Okay, so if the more generalized expats are returning home, the profile of the Japanese population still abroad must be changing then.
Absolutely.
The ones left, or the ones moving to these new areas, they're not the sort of corporate rank and file. They must be highly specialized, maybe more senior, probably financially better off.
That's definitely the conclusion the data points towards. They're a hyper-specialized, highly valued, and likely financially robust segment.
And the financial sector has noticed this.
Oh, yes. The sources show that financial institutions, like Daiwa Securities, for example, are actively targeting this remaining, more affluent Japanese segment, particularly those staying or relocating within Southeast Asia, even as the total numbers there drop.
They're following the money, essentially.
Exactly right. They're setting up new offices, Thailand's mentioned again, specifically to cater to these affluent individuals.
Who are these people? High net worth retirees, maybe. Entrepreneurs.
Could be. or specialized professionals whose skills are so in demand they can command packages that aren't really affected by currency swings or rising costs. This targeted financial focus really confirms that the segment remaining is stable, valuable.
And for this specialized group who do remain abroad, especially with all this corporate change happening, the support structure must become even more important, right?
Absolutely vital. Life abroad, especially navigating new cultures or periods of flux, requires strong social roots.
Community.
Exactly. Community building is crucial. For mental health, social connection, just easing the transition and providing a stable anchor when maybe the corporate structures around you are shifting. It's about building a real life that makes staying worthwhile.
Do the sources give any examples?
They give a fantastic one, actually. The annual Asian-Japanese Rugby Cup, the AJRC.
A rugby cup. Why is that significant?
Well, it's not just about the rugby itself.
Okay.
Events like the AJRC, they act as these really important, non-corporate, often family-friendly anchor points. It becomes a huge social hub.
And
Japanese expats from all over Asia come together, connect, share their experiences, build support networks that go way beyond just their own company.
so it's like a self-sustaining social infrastructure.
Precisely. Especially valuable when maybe traditional company support structures are shrinking due to localization. It shows that even as the overall numbers might decline, the bonds among those who remain can actually strengthen to help navigate the changes.
Okay, so let's try and synthesize this. What does this all mean? This deep dive, it feels like it highlights a real moment of reevaluation for global Japanese presence.
I think so.
You've got economic pressures pushing some people home. You've got corporate strategy, localization, actively shifting others out of traditional roles. And then this diversification into new, strategically vital territories. It feels like a move from maybe volume to value.
That's a perfect way to put it. The narrative isn't just decline. It's more like a resizing and a reprioritization,
Right.
leading to a Japanese presence abroad that's maybe smaller overall, but more focused, more geographically diverse, often more affluent.
And reliant on targeted services and those strong community bonds.
Exactly. Strategic retraction in the developed world allows for that focused redistribution into emerging and resource-rich markets.
So this raises a really interesting question for you, the listener, to think about.
Uh-huh.
We see multinational corporations everywhere prioritizing localization now. Remote and hybrid work are becoming standard.
Mhm.
That old model, sending a manager abroad for 5 years, it seems to be breaking down, not just for Japanese
It
companies.
seems that way.
So thinking ahead, what other major expat populations, maybe American managers, European professionals, might we see undergo dramatic shifts in the next 5 years? Could they follow similar patterns to what we're seeing with Japanese professionals? That's definitely something to mull over.
A really fascinating thought about how globalization itself is reshaping international careers.
That was your deep dive into the changing geography and strategy of the global Japanese expatriate population. Thanks for joining us.